to our panel. We are really glad that you are here with us today, especially bearing in mind how late it is. And I hope that with my distinguished guests, we'll be able to make it as exciting as we can and as interesting as we can. So maybe I'll start with introductions. Frederic Lucenet, Global Head of Manufacturing and Services, European Bank for Reconstruction and Development. Ilona Deręgowska, Vice President of the Management Board Agency for Industrial Development. Joanna Smolik, Director responsible for Strategic Relations at BGK, Polish National Development Bank. And Marek Garniewski, CEO at Orlen VC. We will be talking about mobilizing capital for industrial decarbonization, both public and private. And just to frame a little bit the discussion, I have a couple of slides for you. I wanted to start with the introduction of the company that I work with, InnoEnergy. We are industrial clean tech and climate tech investor, investing in early stage companies across Europe with a large ecosystem created around sustainability and sustainable transformation of the economy. And that is what we are most known for. So startups and driving early stage companies. But recently we added another dimension to our work, and a dimension that is very much linked to what we are going to discuss today, and that is company building. We are involved in a number of large-scale industrial developments across Europe, trying to move forward the difficult ideas in large-scale industry. So low-carbon fertilizers, gigafactories of batteries, green iron based on hydrogen, iron reduction, e-fuels, these types of projects. And that plays very well into the topic of our conversation today. My name is Marcin Lewenstein. I'm with InnoEnergy as Innovation Officer and lead for our portfolio in the field of circularity. And just to frame the discussion a little bit, I want to start with this slide because it shows something very relevant, I believe, and quite interesting. If you look at the emissions, and I divided the CO2 emissions into combustion of fuels, so energy-driven emissions, and then industrial emissions. You can see that we were quite successful in bringing the energy emissions down. But if you look at the industrial decarbonization, we can see that things are, you know, pretty much stable all over the board from 2010 until all the way to 2024. That shows that we were quite successful in driving the energy-driven emissions down, but in terms of our exposure to industrial decarbonization, we are nowhere near success. And one of the roles of the panel will be today to try to understand what are the reasons behind it, and is this the lack of capital or some other types of challenges. One other important thing, if you look across the different industries, it's not that one industry stands out as a, you know, as a poster child, or another simply increased these emissions and therefore we are not seeing them move. Across the board, more or less the emissions stayed stable. And the last drop in the emissions, I do believe myself that it is not driven by decarbonization efforts, but rather by the spike of energy prices due to the war and resulting lower activity in the European industry. Now, moving a little bit further and zooming a little bit in on the region of Central Europe, where today's meeting takes place, I wanted to show this map because I think it's quite relevant for our discussion again. It shows how different countries use funds from the Innovation Fund, which is the European Enabling Fund for large-scale decarbonization efforts. And you can see that while the West is quite successful in both the number of projects that they are able to execute and the amount of funding that they are able to raise with this tool, it's not quite the same with Eastern Europe. And it begs the question, what are the reasons for that? Is it because of the energy mix, or is it because of lack of innovation, or is it because of other factors that we should discuss in our panel today? And just a comparison between the Central Eastern European countries and the West, and it's a staggering comparison. And then perhaps last but not least, talking about an innovation. As InnoEnergy, we know how important the VC and early stage investment landscape is for driving innovations forward. And as you can see here, it was a bumpy road. This is a slide zooming in on Poland in particular, but Poland being among the largest transition economies in the eastern flank of the European Union, I think sets a good example for our discussion. Here we can see that there was a spike in activity around 2021, but apart from that, things are pretty stable, and in the last couple of years, the amount of financing decreased and also the number of deals decreased significantly. It is also an important learning that I think we should take into account in our discussions today. It very much is related to what we are doing with InnoEnergy. We invested in 180 portfolio companies all across clean tech and climate tech landscape, and they are aiming to save cumulatively by 2030 2.1 gigatons of emissions. So it's a no small feat, but to do this we'll need to mobilize the capital and mobilize investments, and that is also what we are going to discuss today. One other thing that I wanted to show you is that we are quite successful already in our efforts in France. France stands out as a country where it's relatively easier to think big about large-scale decarbonized projects because of the qualities of the French grid. It will not be that easy in Central and Eastern Europe, but we will try to leverage our experiences from France and try to bring them into Poland. Mobilizing capital will be a big part of it. And with that, I will now move to our panelists and try to start the conversation with Marek. Because we talked about innovation a little bit in this framing, and I wanted to ask you, first, do you think it's lack of projects or lack of capital that plagues development of large-scale decarbonization ideas? And then zooming in on your particular niche, which is early stage or growth investments in the startups and scale-ups, what types of sectors or what types of technologies or solutions you are seeing as the ones that can drive forward the decarbonization, especially in our region?
Yeah, so thank you for the invitation. Good afternoon, everyone. I believe that few things that crossed my mind when you were showing the presentation, and the one with the with the stable amount of CO2 emissions. I hear myself. How about now? Better? Fine, I'll try. So when I was looking at the the presentation and a few slides that you've presented, the one with the industry having stable emissions, all those industries are actually very reliant on high temperatures, and this is something that you have to to take into consideration when you are thinking about the capability of removing or decreasing the amount of CO2 emissions. So in terms of fuel combustions, we get better engines that need less fuel. We have hybrids and we have EVs that don't require any. And in terms of the industries, all those industries that were presented, they are very heavily reliant on the heat part, and this is really quite a big deal to generate heat out of electricity without losses. So this is probably why we will see still for at least a few years, a decade or so, a stable amount of CO2 emissions from those sectors. This will change, but that needs technologies, and this in a way answers your questions in terms of what we're looking for and what should be chased for. Not talking about AI because it's already everywhere and in these kind of solutions as well, but in Poland specifically, but it also relates to to Eastern Europe. Majority of startups were actually kind of software based, either SaaS or other kind of business model, but they were based on software. Not many investors were looking for hardware solutions, which takes time and a lot of money to scale. And this is a part of an answer why it's how it is. why it is how it is. Also, if we are looking at the 2023, a lot of projects where a lot of public money was being poured into the system, especially again into Polish system, the Polish ecosystem, came from Europe and the European projects that had their timeline scheduled for the end of 2023. And before new projects were released in 2024, we had this gap. So as you shown, there was a drop down in the amount of capital deployed in Poland, but also at the same time, if we look at the number of deals and compare it to the previous years, with half the number of deals we deployed probably the same amount of the capital. So a lot of private funds and funds from like ourselves as well as a CVC, also being considered as a private fund, started to deploy capital into the system. And honestly, what we need now here to stay on course, I think that we should do everything to mobilize private capital. Why? Because we can say that we have a lot of projects that are not feasible for us. We can also hear that in many programs, EU programs as well, those startups are unbankable or unfinanceable because they do not fit the terms that that define what's fundable and what's not fundable. And private money, especially in US, you can see that, which consists of like 80% of funding in US that goes to SMEs and any other companies, comes from private wealth, right? Not from banks and administration. This is the other way around here in Europe. So private investors tend to have different, let's say, checklist, what has to be checked and what should be correct in order for them to invest. So this is just a part of the answer, but
but building on what you said, do you think that the market gives now the right signals and that this is something that European investors listen to, or you listen to another type of signals, regulatory, policy making, grant availability, these type of these signals? And to what extent it's market dimension that is driving the decarbonization, to what extent it's purely the regulatory or regulation driven decarbonization, and hence to what extent the lack of potential lack of market signals weakens the ability of private capital to be deployed?
Yeah, so I still believe that the majority of the projects is because of the regulations. Even if we're looking out at our Orlen strategy, so it's a big group, big company, our strategy is actually, driven around those regulations that are taking part in Europe. And we try to address as much as we can. We know that we will not address all of them because we cannot, we won't make it. And we knew it and we still know it. So we aim high, we will reach as much and do as much as we can, but still it's driven by regulations. What means you either are being punished for not getting there in terms of regulations, or you are being incentivized with subsidies in different projects that could be, that wouldn't be otherwise profitable. And there would be no reason, to deploy capital, your private capital, in those kind of projects. So what we need, actually, it's kind of of a game of what we need to make more EV visible in Poland, EVC visible in Poland, for example, right? It's still a question of either it should be a chick or an egg. It's still a valid question. Why? Because if we are talking about green energy in Poland and reducing the mix even further than it is right now, I'm talking about Poland, but it's very similar for the Eastern Europe. We need an upgrade of the grid. Why? Again, in Poland, majority of green or renewable sourcing or sources of energy production is located in the northern part of Poland. 70, 60%, up to 70% of population lives in the southern part of Poland. So if we split Poland in half, north and south, 70 lives down there. And honestly, there are days in the northern part, so let's say at Pomerania, when we have so much green energy production that prices are so negative, and we have to transfer that that energy down the road to southern part, which requires that energy on a, on a daily basis. So, for example, for an Energa operator, we have around 10 gigawatts of capacity, of power capacity in the grid, connected to the grid. 3 of them, 3 gigawatts, comes from renewables, and they remotely use like 2.8 on a daily basis. At the spike, 3.5, which means they do not have any other to receive that energy. So we have also take in mind, sorry for taking that long, but it's quite crucial for the discussion. We are setting up wind farms on the offshore side, right? Again, north. We are building a nuclear power plant, big nuclear power plant. Where is it going to be built? In the northern part of Poland. So what we really need tons and tons of euros to be, invested in a better infrastructure, grid infrastructure, to manage that energy efficiently. Because on the end of the day, Poland is for now a country with the highest volatility in daily energy prices, which basically is very bad for business, because you cannot rely on these volatilities when you are building your business case. And on the other hand, we still need a lot of money from private capital being poured into those risk investments to keep our guys here in Europe, because the brain drainage right now is tremendous. So we have a lot of challenges. It's not really the matter of of the lack of capital, not really the matter of lack of projects. It's really how we set these things up, and for now these are not set right from my experience.
And then zooming out a little bit, Frederic, to the broader European perspective that I think is very well understood by EBRD. Could you tell us a little bit what are the challenges faced by industrial decarbonization across the region, and also what type of projects or what type of, let's say, ideas are the lighthouse projects that you could point to as good examples of the efforts that should be replicated or should be seen as very relevant for all the regional players in that field?
Okay, thank you. As you know, the European Bank for Reconstruction and Development works from Central and Eastern Europe up to the East, Mongolia, Kazakhstan, and in Africa. So we see, but I will concentrate, of course, on Europe and our neighbors around the Mediterranean Sea. This is important because I think in terms of energy, to follow up your points, we will rely not just on European green renewable electricity, but we need to rely also on our partners who have very good renewable solar and wind capacities in the north of Africa. We are looking at building pipelines for hydrogen. We are financing green ammonia projects in Morocco, in Egypt, and all this is for Europe, to give it to the industry in Europe. So that's important to keep this in mind and not just to think Europe, although it's very important all the time. So we need to keep those partners very close to us and make it easy for them to sell those products to Europe if we want to keep competitive. So that's the first point in terms of lighthouse projects, innovative projects, and don't get me wrong, we see very much the same in Spain happening because of the capacity and the quality of the renewable energy, or as you mentioned, France as well, because of the nuclear grid. So when there is a very strong competitive advantage on the green energy, we will see investments. So that's the lighthouse answer to your lighthouse questions. The other points and the other type of projects we see in Central Europe, in Poland, where we've been very successful investing in industry, is number one, the automotive sector. Okay, in Poland, been very successful in attracting the battery, the EV battery supply chain. Other countries in Central Europe have been very successful as well. So that's the second decarbonisation sector where we have invested lots of funds. I'm mentioning the large projects because, of course, large projects have more CO2 impact, but we, of course, work with smaller projects and startup. But to answer your point, this is maybe the two main sectors where I can...
And coming back to my initial question around this topic of whether it's lack of finance or lack of projects that makes us still not succeed, or that prevents us from success in industrial decarbonization. What is your perception?
I think you've seen the mood today. And we had a dinner yesterday with Séjourné and a lot of industrial partners. And I think the mood is the conditions for investing in Europe need improvement. And therefore, I would tend to be more on the side of there is not enough projects because the conditions are not strong enough to choose Europe, rather than the lack of capital. Of course, you can always have capital, but I'm sure banks in Poland can answer to that as well. But I think the crucial issue is to have the right conditions for choosing Europe, investing in Europe. Typically, the incentive for decarbonization are very strong, as we know, on the continent. It's more about competitiveness, and then the financing will be there.
Thank you. Banks in Poland were mentioned, so Joanna, it's inevitably your moment. I wanted to ask you about your views on the Polish economy, also in the broader context of decarbonization in our region, and to what extent, from your bank's perspective, there is adequate, let's say, number and quality of projects, and also which ones are perceived as the most promising ones, or which, maybe not individual projects, but segments or sectors of the economy are the ones that you associate with potentially biggest impact and biggest success in terms of industrial decarbonization?
Okay, thank you. Good afternoon. Thank you for having me here on this conference. I would say that my opinion is that we are having enough capital, maybe not enough projects, and I would say that we do not have enough appetite for risk appetite for those projects being carried out. And if I look from the Polish perspective, what I can see is that we in Poland sometimes, if we keep in mind the biggest companies on Polish market, then they may be driven by the regulations. I mean, all the innovations and projects that are carried out, not maybe all, but majority of the projects are driven by the regulations. Sorry for that. Because you need to keep the pace with the regulatory basis. And in terms of the smaller companies, what they perceive, how they can compete on the European market, they still perceive that they can compete by the labor costs and productivity, not the innovations, and not the decarbonization of the production. So this is a matter of understanding that in the long run you cannot compete with the labor cost, because as all we sit here together, we don't all want to earn less than we earn nowadays. So competing by the labor cost is very short-term perspective. And when we look a little bit further, then what we should see is the innovations and the decarbonizations that will allow us to maintain the competitiveness on the European market. So coming back to your questions, is there a lack of money, or is there a lack of projects on the Polish market? I would say that's rather lack of project, but lack of proper perspective and lack of another angle is that there is a lack of appetite for the risk, and so we have substantial amounts. What was that? we have we have substantial amount of capital. But the capital has more or less the same appetite for risk. So different sources of capital, starting from grants and ending with credits, and the appetite for risk is more or less the same. So which means that it is very difficult to combine those instruments together and have the mix of instruments that can cover different types of risks. So I would say that as long as we do not understand that we need to have complementary instruments and understand that we need to compete with innovations and decarbonization, then the pace of the investments would be limited.
So I understand that you again lean to the side that there is ample amount of capital, perhaps not fully aligned with the risk profiles, but still adequate, and it's rather the projects that are not there. Now, Ilona, I wanted to turn to you because Industrial Development Agency, ARP, you have a large group of companies under your wings, developing often very challenging and important projects within also the framework of broader industrial decarbonization and industry development and then reindustrialization. And I wanted to ask, what is your perspective of this? Are the companies finding it difficult to come up with projects, or are they finding it difficult to source and finance the projects? And if there are problems with financing, what are they driven by, and how your companies are trying to adapt?
Good afternoon, everyone. My perspective is simple. And I'm confident that this is the lack of financing. Of course, the lack of project is also the reason that we are here in the chart, and we cannot move to the top. But what I experience, and I experience every single day, is lack of finance, and our companies coming from our group, which are responsible, which belongs to the offshore sector and onshore sector, they are suffering lack of finance. And I can give you an example. So when you would like to achieve a project, I mean to be a partner for developer, you need to present the performance bond, advance payment bond, and warranty bonds. This is the barrier to access the project. And what I can see, only big companies, I mean the top, let's say, companies on the market can afford that guarantee lines, which are given by banks. This is right now is very common, let's say, slogan. This is, I mean, I'm referring to local content, which is right now popular, let's say, approach. But we need to be more practical. What I mean, more practical. We need to deliver the limits, the guarantee limits from the companies, which allow them to take over the tender. For instance, only big companies like responsible for delivery the turbines, like Nordex or Vestas, they are enough big to have access to the bank warranty.
So what you're saying is that the capabilities are there, but the deployment of the project or deployment of your daughter companies into the projects is not easy because of lack of access to financial tools which are required to actually be represented in the bidding procedures.
It's because of the financial standing.
Okay.
So, for instance, offshore projects are high volume projects. It's around 200 million euro, sometimes 200 million. It depends on how big the farm is. And usually when you need to deliver the performance guarantee, it's equal around 20, sometimes 50% of the amount of the project, which is really high volume. And only big, let's say, big companies, big players on the market can afford to get this bond and deliver to the tender. This is really, in my opinion, this is a barrier to access and to win the projects. Sometimes the solution is to be as a consortium of the companies. They can put together the guarantee limits and deliver the guarantee. But when we go to the medium level, I mean, to the small companies and medium companies, this is really difficult to deliver that amount of guarantees. And in my opinion, this is also the barrier to get this project.
I somehow expected that the outcome of this short first discussion will be that the industry will see probably will see financing as a limiting factor, whereas the finance world will say, okay, we are here and we are here to help and deploy, but we just need good projects, right? And that's a usual thing. I don't want the panel to drift into a blame game, but I just wanted to add one other element into the discussion, and that is risk or perception of risk. Because I think this is something that we should stop and try to understand a little bit, to understand also in a better way how we can, and if we can, mobilize adequate private and public investments for industrial decarbonization. And Marek, I wanted to get back to you because you guys, being a VC, are most exposed to risk among probably all the players sitting in this panel. So I just wanted to understand, what is your perception of evolution of the risk in large-scale industrial decarbonization projects, also from the perspective of startups, scale-ups, and growth companies that are developing solutions for this type of activities?
Yeah, so in terms of large-scale projects, which are not part of VC, then definitely what helps is the guarantee of a certain price of an offtake that you will provide. Let it be energy, generated by some offshore wind farms. If we have some minimum price secured, then you can make it bankable. This is what we are saying, right? So if we can see that we have secured some minimum internal rate of return, and then it's bankable. We can, issue some bonds. Maybe we can take a loan, whatever. It's doable, but it's not always the case. And honestly, in terms of VC investments, which is high risk, high reward potentially, this is something that is actually still kind of an enigma to big companies in Poland, to mid-caps as well. Not only talking about smaller companies because they never heard about it, unless there are startups. So you have to keep in mind that Polish VC stage is fairly young, right? So we do not have enough experience. We do not have enough business models or or good examples to follow. Even for us as a CVC, we weren't first on the market, but still we are one of the very few in Poland. Why? Because the risk factor is the biggest one to tackle with. If we're talking about companies that are partially state-owned or state-owned even, we are talking about people governing those companies with risk in mind. Why? Because if anything fails during that investment phase or sellout phase or development phase, they are accountable for that. And honestly, there was no good examples in the previous managements and changes and so on in the leadership that would somehow not even reward risk, accept it at any level. So if we are talking about CVC, from my experience, if we were to take any kind of a partner from a financial VC, and we would put him in my place, in my shoes, he would resign very fairly, very quickly.
And the way you referred to the challenges of government shifts was an extremely civilized way of framing this. Appreciate it a lot. Now, but then let's try to think of what we can do to actually try to embrace more risk, which is a factor in those projects, probably by mobilizing private capital to assist the public capital and to de-risk the investment of public because of large involvement of private, right? Because private serves in many minds as a probe again, or as a that's not the right word, as a way to safeguard the way the public money is spent. Because if private investors commit, that means that they are, pursuing a project that is sound, and they are not doing it for any other reason, but they hope to get an adequate return in this way, right? So again, the title of our panel is very relevant here because it says mobilizing public and private. And from your perspective as a VC, sitting a little bit on the fence, what needs to happen for the private capital to be more mobilized? Because what I'm seeing here in Europe now, and again, please comment with your thoughts. I think that we stopped looking at market signals, and we stopped really taking and appreciating the capitalist dimension of the thing. Like, where is the profit? What can I do to gain market exposure? Taking risk to get to a project that will deliver profits simply because of its own qualities, of its own premises. We are looking for grants. We are looking for regulatory inspiration, if I may. We are looking for ways to make projects bankable and to make sure that the risk is elsewhere and not with us. So it's like it's a bit of a situation whereby we lost the zeal to actually earn money. And what are your thoughts around that?
Yeah, so honestly, if we are, let's say running a VC and we are trying to get a company to a place where it's bankable, then we probably shouldn't run a VC. Honestly, Tesla, many major startups that became, true superpowers today were unbankable for years. And they needed a lot of capital. So the answer is, honestly, from my perspective, more private capital. How to activate, how to activate it, how to implement it. Honestly, it was kind of a hint in your presentation. We've seen a lot of investments in 2021, 2020, right? The spike of number of investments. If we were to refer how many of them were from private capital, quite a lot. They were backed up, usually by PFR programs and VC funds that were, relying on those public money as well. In a way, it's not always been 50-50. Sometimes it's been 60-40. So private investors could somehow dilute their risk as well by taking some, public money into account. But we also had the lowest interest rates. Basically, we had no other options to make money, and private capital goes for for returns, basically. So if we are willing to to welcome some new private money, because this is not something that happened in Poland or in Eastern Europe or in Europe as a whole. The number of deals and the number of money deployed was basically split in half globally. It's not a common thing here and not uncommon somewhere else. It's something that happened globally. So we have higher interest rates, which means to get more private capital, we need to look for better quality projects. We need to manage the risks better, right? And we have to actually play our role as investors, not to be just money givers. We used to say in 2020s, 2021 that if you do not have anything as an investor, if you don't have anything that will basically pull those startups on your side, if you will not propose something over the money, some smart money, as we call it, you won't get a startup to take your money, because they could take from anyone all over the world. Now it's a little bit different. There is less funds, so if they have money, startups, rather come to you, not the other way around, and you can choose from good projects. But still, the interest rates are higher, so the returns, hypothetical for now, returns should be also higher. So the potential of the returns in like 5 years, 10 years, also should be higher and visible. And if we are talking about risk management right now, honestly, it's not an easy game, because on one hand we really know that only one thing truly will help Europe to strive and fight for being on the top of the list. If we're talking about being competitive globally, it's innovation. And now we have to switch the tables. We have to change our approach. Maybe banks should be, more risk takers, because in Europe, 80% of the money that goes to companies comes from banks. They have to make sure that maybe, from the financial perspective, especially, those companies are already bankable for some kind of, smaller kind of funding.
Right.
But we really need to deploy that money. The second thing that also is kind of private, but not being treated like so, is the pension funds. Why we don't spend like 5% of the pension funds money in high-tech companies? Why don't we like US does?
Well, perhaps playing safe is a bit of an answer, but let's turn to banks now. And Joanna, I wanted to ask you about your perception of this risk factor, and also your ability to cooperate with private investors along different types of maturity stages of companies, or driving the industrial decarbonization concepts from startups and scale-ups through to the industrial players, all the way to big infrastructure projects, and what would be the role of private investors in that, and what could be the role of BGK, and also how to manage the risk factor in all those different maturity stages.
Yes, so we are trying to be ready for all that activities. We are right now in the middle of the process of reinventing our investment strategy. We have published our strategy as a bank, and then right now we are working on the investment strategy, because we also have a, let's say, investment angle, rather limited, but still we have it, and which is focused on innovations, on startups, on scaling up business, and we are starting with the venture building, which I think, me personally, I think that the venture building business is something that may result in getting another viable and feasible projects, venture projects to be done on not necessarily on Polish market, but globally. So we are trying right now to focus on that investment strategies and make it more flexible. So which means that we might be not necessarily focused on one and particular sector or a couple of particular sectors, but we will be flexible enough so as to meet all the, let's say, demands from the private money, because our role on the Polish market is to fulfill all the gaps that appear on the Polish market, and of course the public money is something that might help, but we also need investors within let's say enough risk appetite. So starting from the venture capital and then scale up business, we will be ready for that part soon. And the grown-up businesses, of course, which are bankable, we can provide the financing on a banking part, and the role of the private investor is significant, because we seemingly like ARP, we are only the financial investor, not the, let's say, proficient investor in certain fields. So we need not only the private money, but we need the private experience and know-how so as to make the business viable. Yes. So as long as there are feasible projects, feasible ideas, readiness of the private capital to invest in that field, and they are only lacking a part of the equity being provided to the project, then we are here to help. And what is more, on the later stage, we are here to help to scale up and to provide that at a later stage. And it is very crucial from my perspective is also that we can use all the sources that are available on the market, that we can combine all those funds coming from development institutions, not necessarily from BGK, but also from ARP, PFR. We have many of that on the Polish market, so we can combine them and make the structures more, let's say, not necessarily complicated, but ready to finance very complicated projects. Yes, yeah, basically this is my perspective here.
Thank you. Frederic, I wanted to ask you about, again, the broader European experience, and maybe we should even go beyond into the neighborhood and understand, what are the qualities and what are the advantages of those countries in terms of perhaps the flexibility or agile approach in bringing decarbonization ideas into the market. And if you look at your projects across both Europe and neighborhood, which countries stand out as the ones that you would recognize as potentially the ones we could learn from and we could benefit from emulating some of the ideas that they have for decarbonization and for driving it forward, also in terms of their ability to mobilize capital and leverage the possibilities created by the financing institutions?
To be realistic, we work in much more difficult environment than Europe. So I can't tell you, give you example of countries where the agenda is more advanced than here. I gave in my first answer examples of countries where the fantastic renewable energy, solar and wind power will give advantages, which means to build industries, greenfield, that will export green products to Europe. So in line with CBAM. And so sometimes it's an advantage because, for example, ammonia or hydrogen that will feed the European industry. But sometimes Europe will complain because Europeans will complain because it will compete with Europe. And so that we have to be aware that in those countries, you can build, for example, a green steel plant with much lower cost than in Europe. So I don't want to paint a picture of the grass is better in the neighbor's garden. Okay, I think it's a balance, and I would say, but still to give something concrete, I would say in terms of fertilizers, we will see benefits for Europe because Europe currently depends. I'm just taking fertilizer for two reasons. First is chemicals. We discuss a lot of chemicals. It's a big CO2 emitter in general. And second, we depend too much from Russia. Okay, so we will have new partners. Will help Europe to be also greener and independent, more independent, or at least diversified.
But then, to what extent the risk factor is mitigated by offtakes in all of the projects that you are seeing, and to what extent you are open to take market risk as a bank and as as the ecosystem of financing institutions across Europe? Because I don't want to, put too much burden or too much spotlight on EBRD, but what is your perception in general of ability to embrace risk by public players in Europe now?
So in Europe, we do have lots of instruments, okay? Most instruments are putting a bit of oil in the financing, but I feel they are not the reason why a project will go ahead. So we have very good instruments. Some session this morning spoke about EU Invest, but there's a lot of other instruments. That helps in general to lower the cost of financing, but that's not a decision, a breaker or yes or no for the CEO in Frankfurt or in Paris. But it helps maybe to move things faster. I think the big public money is what you showed, the innovation fund, okay? Because these are for carbon capture, for example, they are 200, 300 million per projects. For DRI, there was a steel section earlier, same amount of money. But even with those huge amounts, the sponsors, the investors, the large steel companies, the large cement companies are not yet investing because of what I said at the beginning, the visibility on the competitiveness of investing in Europe, even with those large amounts, is not obvious.
But then,
not always, but
But then, do you think it's the fear of how CBAM will be implemented, and to what extent it will defend Europe from unfair competition or not level playing field?
Yeah, there's a bit of a chicken and egg, and waiting for CBAM or doing it before CBAM, and how much leakage there will be through CBAM, because you won't be able to import dirty steel from China, but what about a dirty car made of steel from China? Okay, as an example. But I think the EU is going to come with also CBAM in a second wave on downstream. But that's definitely a major factor I see with investors and CEOs in terms of their decision making.
Okay, thank you.
So people complain about CBAM, but in the same time, it will make a huge difference.
Let's see how it works. Ilona, if you and your companies, you are able to put together best possible financing instruments, how would they look like? What are the top qualities that you would look in different type of financing instruments to ensure that your companies can drive industrial decarbonization forward? And what are the ways in which the finance world could evolve, in your view, to ensure that there is more traction?
Okay, so the answer is very simple. The instrument need to be available for companies which expect to have this instrument. What does it mean? We have some, let's say, idea how to create, and we are on the path to create some instruments that are available for companies that belongs to the offshore market, and also to improve the local content, let's say, solution. And those instruments will be set up in agency as a platform, but we as an agency, we need to also have the support from others, so to mitigate the risk and also to share the risk with others. So the solution is to involve directly government in the funds which are coming from government, and also mitigate the risk with the financial institution, other let's say partner of the bank market. And from one perspective, let's say the companies can see the support from the government, but the government will not be touched the 100% of the risk, and it will be shared between. So what ingredients can reduce the risk of the project? First of all, the knowledge and that experience, yes? So when you have the experienced partner which are leading the project, you can be more convenient that the project will be successful. Another part is the time frame. So every construction project need to be lead during the time frame which are described in the project. If not, you need to pay some penalties. You need to be responsible for drawing the guarantees, so it increases the risk. Another part which can reduce the risk is another partner in the project, so that can take some part of the risk and put some knowledge and experience inside. So when I can ask you a question, what type of instruments we can deliver, so those instruments that there will be, let's say, the companies which are asking for the guarantees, which give them the guarantee that they will have the support if it's necessary, and another part which mitigate the risk of the projects which deliver the experience.
Thank you. So somehow it's also a question of incentivizing through those instruments that are available, the cooperation between different types of stakeholders, which can bring different elements into projects. So a bit of a cluster-driven approach, which I think is something that will resonate a lot with the European policymakers, at least to my knowledge. We still have a couple of minutes, and I think it's a good moment to bring in our audience and to ask if there are any questions in your heads now after the panels. Don't be shy. You earned your time waiting in this warm environment for such long for this opportunity. So, anybody? Yep.
Good afternoon. I am Alfred Middelkamp. I represent the regional government of the Netherlands, and I'm very interested in this discussion, but in the end it will be a deal between the financer and the company. And I think that especially thinking about InnoEnergy, you are focused on clean tech. But as a regional government, I also want to make sure that companies go through the industrial decarbonisation. So they need to be open to these innovations. And I think that will also be a factor in diminishing the risk a bit, because as a European Union, we should also be open to receive the innovations that these companies bring to the market. And that doesn't seem too much part of the considerations in risk as discussed up until now. So I'm not really sure who to direct this question to. But it would be nice to understand a bit about this perspective as well.
Anybody among you? Yep, Joanna.
Okay, so you really touched the point. I mean, because we are discussing we are focusing all about the risk, but nobody is willing to take that risk, and this basically is a clue for having a success in that. So. Yes, definitely we need to combine all the instruments that are already in place, but combine it in a smart way. So giving you an example, for example, if we have grants on Polish market, grants for innovative projects, and the grant provider requires, for example, all the assets to be pledged to securitize the grant itself, then where is the room for any banking activity and so on? So we need to understand what is the role of different institutions. I work in a bank, and I know that I work in an extremely regulated environment. So I need to sometimes I have the appetite for financing certain projects, but the regulations do not allow me to accept the risk to such an extent. But I have the other institutions, I have grants and subsidies which should fill that gap. And in fact, when you compare the readiness to accept the risk, it is more or less the same. I mean, everybody everybody is, let's say, is not willing to accept the same part of the risk. And what is also interesting is that maybe we should find a way to make those instruments more flexible, because for example, if we have different public support, public aid, and that public support, let's say, covers the risk of the market risk. For example, like in the another example, if you have biomethane installation, you can have the public support for covering the market risk. But what about the technical risk? Who is ready to accept the technical risk in that very installation? And in that case, you cannot combine. You cannot combine one state aid providing tariffs or premiums to the installations and another aid, like for example InvestEU, which covers the technical risk of that installation. So I believe that we need to understand the clue for that. For the success is that we need to understand different types of risk, and we need to find a solution how to cover the different types of risk. Thank you.
If I can relate to that, I think that the answer is to looking for examples and following those examples. Our recent investment in a company from Scotland, which had their grant as well secured, like 20 million, Great British pounds secured by the Scottish enterprise investor. He joined this entity as well as an equity investor together with us. And Beiersdorf, so another strong player in that field, and with different companies on board already. So there are examples, good examples of how it can work. How can government, somehow be more flexible in terms of how to back up those technologies. It was a recycling technology for plastics, for polymers and monomers, but basically. There are examples. So we really have to stop saying that we can't do this and that and try to reinvent our approach. This is where the risk takes part. Either we are ready to take a risk, or we are saying that, yeah, we will take the risk if someone risks it. So this is basically unbankable again. This is what I'm saying. If we do not have private money, or we do not attempt to change the approach of a public spending in a way that it's, to some extent, more risk appetite friendly or whatever, then we are, just running in circles, basically. We know that Europe stands on public money and bank money. This is what I'm saying. US is being financed by private wealth. Every American spends about, half of its income by investing in either stocks, whatever. 80% of financing in US comes from private wealth. 85% of financing in Europe comes from banks. Banks have their, sheets, forms, and checklists, and regulations and whatever, long lists that no one cares to actually go through. If we're thinking about startups, we have Polish investors, we have great Polish examples, for example, if you're talking about Poland right now, but it's in Europe the same, that reached out, tremendous success. In US, which is ironically the best, answer that we should reshuffle, change our approach, how we are spending our money. And this is why I'm saying private money, pension funds, public money as well. These are still our money. They come from our, from our income. Governments don't have money from the cloud. They take it from us. let's make a change. We really have to put some pressure on that, because we either will become a scansion of globe as Europe, and people will come to see our castles, our great nature parks and whatever, but we will not have anything else to offer. So really, private money, more spending, open your minds, stop saying that we cannot do this or that, just do. Change things around you. And by giving an example, more people will follow.
Marek, this was as good a moderator's summary of a panel as it could be. Thank you very much for releasing me from the duty, and thank you everybody for participating today. Thanks a lot to my distinguished guests. Thank you.